So again, I'm Dean Jenkins. I'm the founder of followmetrades.com, and today I'm going to be walking through my secrets, some of the things that have just helped me be really, really successful in the market. And before I jump into this, I'm going to go through this presentation pretty fast. What I want to leave time for is I'll analyze some of your stocks, some of your stock picks, and what I'm going to do is, if you would like to download this PDF of this presentation afterwards or during, review it a little bit later, I'm posting the link in the chat right now. Give me just a second, send it to everybody. There we go. So there's a link where you can download a PDF of this presentation and study it a little bit later if you want to. And so I'm going to walk through my method, my tools that I use, and then I really want to go fast, and I want to leave some time where I can look at some of the stocks you're interested in. I'll show you a couple picks that I like right now, so you can walk away from this presentation with a couple trading ideas. And again, I'd be happy to look at any charts you're interested in. We'll look at live charts on that. So what I'm going to walk through today is just how I scan and find the absolute best trade setups in the market, how I identify the highest potential winning trades, and then how I manage trades for max profit. Again, I'll analyze as many charts as I'm able for you, and let's just walk through the basics of the tools that I use first. So that's always, we got to just start with the basics and what tools do I use. So I use Dow Theory. I use a really simple version of it. I use Elliott wave theory, and again, a very simple version. Some people roll their eyes when you say Elliott wave theory, and Elliotticians can't agree on wave counts or stuff like that. I keep it very simple, and the students that I've mentored and that have taken my courses, they're able to reproduce my wave counts. We all come up with the same answers there. And I use the applied reality trading software from Trader's Coach. I have a great relationship. Bennett McDowell, the founder, was my mentor. It got me really turned the corner to be successful several years ago, and I think he's developed some remarkable software, and you'll see it in action here. And then a little bit later, I've just added a new technique that I'll share on the live charts that I think I'm excited about it. I think you're going to like it. So let's just look at Dow Theory real quick. And again, I'll go fast. You can download this. Jump in with any questions you have, please. So Dow Theory tells us, a simple version of Dow Theory says a bullish trend is simply a series of higher highs, higher lows. I got it marked on the chart here. Higher high, higher low, higher high, higher low. And as long as that trend of higher highs, higher lows is unbroken, the bullish trend is intact. And a bearish trend is a series of lower lows, lower highs, lower lows, lower highs, and as long as that is unbroken, the bearish trend is intact. So that's really simple. And Dow Theory also tells us that the bullish trend is over when that pattern is broken, when we have higher lows and then we have a lower high and we take out a previous low. That's really a signal that bullish trend is ending, and that's also where a bullish trend begins. And the same thing for a bearish trend. A series of lower highs, lower lows, and then when we put in a higher low and go on and then take out a previous higher low, that sequence is broken, and that could be the start of a bullish trend. So that's just a quick look at a very simple version of Dow Theory. Elliott wave theory. So this was developed back in the 30s by Ralph Nelson Elliott, and you see what's called the 5-wave idealized pattern here. And Elliott's theory says that the market moves in waves, impulsive waves and corrective waves. So it's in the chat area. Howell is asking, how do we get a link to the presentation? I just posted it in the chat area. If you look over at that, there's a link there, and you can just download this PDF. And if anybody can send me questions, Dean at Follow Me Trades, and I'll, right after the presentation, I'll be monitoring that and be happy to answer any questions you have that come up. Okay, so Elliott wave. So the market moves in a series of impulsive and then corrective waves. The big impulsive wave, as you can see on this chart, is wave 3, and that's really the best wave to trade. Wave 4 is corrective. Wave 5 is another impulsive wave, right? So I really like to trade wave 3, wave 5. They're the impulsive waves, have dramatic price movement. Okay, and this is showing a bullish trend, of course, but you can just mirror it down, and it works the exact way for a bearish trend. Okay, and you have wave 5, wave 3, and bearish trends. So I trade both bullish and bearish markets for sure, right? Occasionally I'll trade a wave 4. Sometimes that's all that the market's given us is corrective waves, and that's the case right now. There's a lot of corrective waves. So we'll trade those, but I really prefer wave 3 and 5, okay? As a part of Elliott wave theory, we use Fibonacci numbers. And Fibonacci numbers are, they approach magical, right? They're found everywhere. So the Fibonacci sequence is starts 0, 1, 1, and 2, 3, 5, 8, 13, 21. And the Fibonacci, what are called Fibonacci ratios, they're the ratios of one number in that position to other positions in that sequence, and those ratios hold consistently. And so, for example, a number divided by the previous number approximates 1.618, then by the next highest number is 0.618, and so on. Okay, that number of 0.6180 is called the golden ratio, and it appears everywhere around us in nature, in the shape of snail shells, spiral galaxies, the way flowers on a, like a sunflower are arranged. Fibonacci ratios and rates of expansion show up in most complex systems, and the market is no exception. So we see Fibonacci ratios in the market, and we can use them to our advantage. So here's the example of Fibonacci retracements being used with Elliott wave theory. So here we've got an initial wave up, right, an impulsive wave, and after an impulsive wave, what we look for is a retracement, a corrective wave, down to Fibonacci levels. We like to see it come down from 38.2 to 61.8. And if it does that, so not all retracements do, but if it does, it's really a clue that what we have forming here is a fairly predictable pattern. And if we have the early stages of this pattern falling into expected parameters, then the subsequent parts of this sequence have a higher and higher probability. Okay? So after we see an initial move and a Fibonacci retracement, we can project a Fibonacci extension. Where's this thing going to go next? Well, that's really valuable, right? If you can look at a stock chart and you can predict with pretty high probability where it's going to go next, that's what it's all about, isn't it? So that's what we're looking for. That's how I use Elliott wave, Dow theory, and Fibonacci numbers. And you can see Elliott and Dow really go hand in hand. They work together. That as these impulsive waves form, right, they follow Dow theory. So when we're in an impulsive wave up, we have a series of higher highs, higher lows, and then we can see evidence when the trend changes and it goes into the corrective wave. So they really, really work well together. Okay. Again, these aren't the only theories on market price movement, but these ones have worked really well for me. They speak to me, and they have for other people too. I've been very successful with it. Okay, I also use the applied reality trading software, I said, and it has several components. So I talked about Dow theory and how higher highs, higher lows are part of an uptrend and lower lows, lower highs are part of a downtrend. Well, these pyramid trading points identify key higher high, higher lows, where on the bullish one, where the ratio of the up leg, the higher high is its relationship to the down leg. There's proprietary algorithms for that, but these identify very key entry points and support and resistance points. So what we do is take entries on these pyramids and we trail our stop up to the base of them, and you can see how in this trend that really, really worked out well. The applied reality software also includes reversal bars that show key reversal areas, and we use those for scaling out once we're in a trade, taking some profit. The optimum wave locator at the bottom here is an oscillator that helps us with our wave count to confirm what wave we're in. And this precision trend filter confirms the trend, and it's a really easy indicator to use. If it's green, it's predicting more highs. If it's red, it's predicting more lows, and if it's yellow, it's neutral. It's not predicting anything. So that's pretty easy to interpret. So here's these tools in use. So this is last summer, back in 2015, and we're absolutely going to look at some newer charts, but this just highlights, the method I'm using and some great examples here. So back last July, right, just about a year ago, using these exact methods that I just explained to you, I saw a bearish pattern forming on the Dow. And I posted my YouTube analysis, right? So here it is. We had been in a channel. It was awful, right? From March up until early July. It was in this terrible channel, really tough to trade in a channel, and we saw it break down. We saw it break down. Alan is asking, what email can I send to get my view on an Elliott wave? Hey, just hang out. We're going to look at live charts, Alan, and I will look at whatever symbol or index you would like, man. So we'll do it real time here. Okay. So I saw it break down out of this channel, and then I saw this pattern we talked about for Dow Theory: lower, low, lower, high, new low. I said, wow, that is interesting. That has my attention. I said, boy, this high needs to hold, and if this low is taken out, we could have a little bear move starting here. Well, that's what happened, right? And the high held, the low got taken out, and if you remember back last summer what happened, bam, there it went. So the tools did a really good job, the analysis technique did a really good job of predicting that, right? And because we saw that coming, we went looking for some short trades that kind of matched that pattern, what we were expecting to happen. And we took a short on Ingersoll Rand. And isn't that lovely when you take a short? We took a short on 727. Now, we didn't know it was going to gap and be this dramatic. We knew it was heading down, or high probability. But isn't that fun? Took a short here, right? Thing gaps down and just a monstrous down movement. And my subscribers, I published that to them. They were able to participate in that trade, and we made a good return on that one. Same thing on Goldman Sachs. We took a short entry on August 11th, and it dropped like a rock as well. So that was just good fun. Okay, so I'm going to talk a bit about how I scan and find these kind of trades. Okay, because that's important. It's one thing to have the analysis techniques down, but yeah, there's about 6,000 stocks and who knows how many ETFs and futures and forex, right? We can't go scan those every day to look for setups. So how do I narrow it down to a manageable set of charts to analyze? Let's walk through it here. First thing I do is analyze the overall market trend. And so this is just looking back at June. Again, it's just a good example, and we are going to look at more current charts here. But last June, market's in a channel. So that's my conclusion, right? Broad market is stuck in a channel. Okay, fine, right? I want to go look for a sector that's not in a channel, right? If the market was in a trend, then I want something that's participating in that trend or is counter trend, right? So there's great tools out there. This is the Morningstar sector list. No, this is iShares sector list, right? And so I'm at the same time that the broad market was stuck in a channel, I'm looking here. I go, what are the top performing sectors? These sector ETFs. And wow, looks like biotech, healthcare, pharmaceuticals. Wow, looks like that sector is on fire, right? The S&P is stuck at 0 year to date, going nowhere, and these are up, double digits up into the 20s. Okay, good. Let's go look at that, right? So I started looking within the sector for price patterns that meet my criteria, and there's only really two trading patterns that I'm looking at. One is a channel breakout into a new trend, and the other is an Elliott Wave 5. So the Elliott Wave 5 is the higher probability because we had 4 complete waves that met a pattern before that. So the probability that Wave 5 is going to be carried out gets pretty high. But the channel breakout is where the big Wave 3, the biggest moves come from, so they have higher return. So high return, high probability, those are both good things, right? So I go looking at a pretty small list then of stocks that are in the sector I'm looking at. They're with the sector trend, and they got the pattern I'm looking for. And this is I call it a shape. This is a shape I'm looking for. Big impulsive move up, a retracement, and then it's beginning to head back up again. Well, that's a potential Elliott Wave 5. Totally gets my attention, right? Then I want to do some math here. I want to identify the highest potential winning trades. So just because it has a probability of going to the target zone, I want to make sure that target, the reward to risk on it, is good. So I want a high probability of winning. I want a really clear support resistance area to put my stop in. Stop placement, risk management are essential to my trading success, and I think to anybody else's success as well, right? It's one thing, you can win lots of trades, but if you don't control the losses on the losers, you can still have a negative P&L, okay? So I want clear stop areas for my risk management. I want a high reward to risk ratio on the trade. So here I've got my analysis on here on this. This is Merge Healthcare. That's my example that I found back in this time frame, right? So I label my Elliott waves. There's a 2, there's a 3, there's a 4, and I'm using my Fibonacci extension tools to project a wave 5 target zone. So it's 61.8% up to 100% extension. In this case, 663 to 818. Okay, that's pretty good. And this is not ready to trade yet, right? Because if we look at Dow Theory, we got a high and it's pulling back, but we don't have that third new high coming in yet, right? So there's a new high. There's what we need. We need a pullback and then a new high to really confirm that this next trend upward is happening, right? So I got it. There we go. Up, back, new high. So now I've got everything I need. I've got an entry price, which is at $5. I've got a stop loss at 444, and I got a target price being conservative, using the low end of the target zone, right, the 664. So let's do a little math on this, right? Oh, here's all my prices. Slide build going on. So I calculate the risk per share, right? If my entry's at $5, my stop's at 444, I've got a 56 cents per share risk. Okay, what's my reward? Well, my low target is 664, my entry's 5. I've got a $1.64 per share potential gain, and more if it goes higher, right? So what's the ratio of that, right? Well, the ratio is 2.93. 1.64 is 2.93 times greater than 56. So that's good for me. I don't want to take a trade. I'll never take a trade that has the potential to lose more than it will make. I like it to be at least 1.2 at a minimum, and over 2 to 1, is better. And of course, after that, higher is better, of course. My profit potential, the low target is a 33% gain on the trade. At the high target, it's a 63% gain on the trade. Good news, okay? So that's all a go, right? So I took that trade for sure. I published it to my subscribers. We got in at $5, and this was a little bit unusual because it bobbled around a little bit, and then it shot right up into the target zone and then went totally flat. And when you see a price target like that, that means something unusual is going on with the company. And what happened was IBM decided to acquire them at about 7.25. Well, it ain't going any higher than that, not in the short term. So we went ahead and closed the trade. We take profit once we're in here, and it reverses a little bit, and then we exited the trade up here, and we made a really, really nice 34% profit in 4 weeks on this trade. So that's kind of how that works. A more typical chart, here's Tesla. We use as we manage trades, we use what the market is telling us to trail our stops up. So Dow Theory, here we go, higher highs, lows, higher highs, higher lows. As we put in new highs, we trail our stop up to the previous lows. And the applied reality software does a great job of painting pyramids as well to help you identify these spots, okay? And then when the trend changes, I just try and stay with this as long as possible, as long as that trend is intact. And then it'll tell you when it's over. You'll start putting in new lows, take out previous lows, and you get stopped out and it's over, and you take your capital on to the next trade. But I never enter a trade without having a clear, predetermined plan for how to manage it. So I never take a trade if I don't have a entry price, a stop price, and a target price, right? And then I have these rules for managing it rather than making decisions and getting out soon or whatever based on emotion. Follow these rules, and that's how we maximize profit. Okay. So again, I look for two primary setups. I look for a channel breakout and a new trend starting. That's where wave 3's come from. And I look for a trend continuation. Okay. Elliott wave 5, it's easy to spot because you got 4 waves before there, and it's a high probability, right? I got simple criteria I'll share with you here, right? How do you spot a Elliott wave 5 trade? Well, there's been a wave 3, and we don't have to overcomplicate that. It's just the biggest, most dramatic price movement on the chart. Then we go look for wave 1 and 2. Where did that start? And a simple rule: wave 2 cannot trace beyond wave 1. We look for a wave 4 that retraces to Fibonacci levels, and then wave 5 proves that it's begun with a Dow Theory. New high, higher low, higher high, just like I showed you on that merge chart. You get all that, it's a go as long as the risk to reward is good. Here's an intraday chart on the EMini, and this is a wave 5. Now there was a channel breakout setup here too as it broke out. But let me show you. I just want to demonstrate this wave 5 setup. So here we go. Price broke out of the channel. There's wave 3. Nothing more complicated than that. There it is. It's a dramatic price move. The most one on the screen. Okay, boom, wave 3 is present. Wave 1 and 2, there it is. It's the beginning. Where did it start? You know, a move up, a move down that did not go below the bottom of wave 1, and a dramatic move. Perfect. Wave 4. Need to see wave 4 retrace down to the Fibonacci zone? Perfect. It did it. There's wave 4. And now we need to see a higher high, a new high, higher high, new high, higher low, and then take out the high, right? There it is. There it is. So we take this trade right there, long entry 1940 on the ES, and we expect it to go up into the Fibonacci extension zone, into wave 5. And boom, there it goes. Right? We trail our stops up as new highs are put in. We trail our stop up to the previous lows. We scale out either as we get a reversal or as it crosses key Fibonacci areas. And there's the market close. Go ahead and take our profit on that trade. Three contract trade, $1,300 profit in a pretty short time frame, about just under 2 hours. That's how it works. Okay. So let's look at the current market. I'm going to give a quick look at the SP 500 chart, and then I would be happy to take any picks. I'll show you one pick that I like right now that I think is ready to trade, and then I'd be happy to take a look at any trades you guys have, any symbols you'd like to look at. So look, make sure you guys can see the chart right now, right? The live chart from TradeStation. Everybody good there? You just type in a Y or yes or. All right, Marco, thank you. Thank you. Okay, so this is the S&P 500 chart on a weekly time frame. Weekly time frame. All right. Pavel, thank you very much. Mike, Balo, Julian, David. Awesome. Okay, so this, everybody remembers the market decline back 07 to 09. The recovery to that began back early 09, and by the way, you can see Dow Theory signaling that this is starting a high, higher low, new high. That's when it signaled that this trend was starting. Okay, and this is again a weekly chart, so it's a pretty long time frame. But from 09 up until mid last year, right, pretty much an unbroken move, and there has been no wave 4 retracement to the S&P 500 yet. Okay, no retracement yet. Now, if you compare this move from 09 to 15, look at where we're at now. This is consolidation. This is getting a little bit choppy and a little bit toppy, and you can see that the momentum is definitely coming out of the oscillator. Now, of course, last week, you know, after the Brexit vote, we had a pretty sharp little decline, and then for 13 trading days after that, we went straight up. 4 of those days, we put in new highs on the S&P 500. Okay. But, you know, it may go put in some new highs, but I don't think we've got any anything really impressive coming, right? We're sitting here at about 2159, right? If we go to 22, 23, even 24, maybe, right? But at some point, you know, trees don't go to the sky, markets don't go up forever, right? And just a natural, healthy, ongoing part of market cycles is impulsive waves and corrective waves. If you look at just a quick look at the monthly chart, if it'll come up here, right? That's a normal part of the market cycle. This goes back to 97, right? And what's clear is that the down moves, the corrective cycles, happen a lot faster and a lot more dramatically than the up cycles. So when, not if, but when we get the next correction, it's going to be a lot of fun. We're going to make a lot of profit, right? For those who are on the right side of it. And that correction at this point would take us down to S&P 500. 1674 to 1365. Okay. And Roxanne has a sharp eye. She goes, "Hey, you're using Art and Ichimoku Cloud." Well, that was my surprise, Roxanne. Yeah, that's a new technique I've just added, and I really like Ichimoku Cloud. And we'll use it and explain it just a little bit on a couple picks here, including any that you have. So Alan's asking if I can look at the Swedish index. I don't know if that symbol comes up on TradeStation, Alan. Sorry, I don't think I have that going right now where I could actually do that live. And I did want to show you guys a stock pick that I like right now. Okay, and then I'll take a look at yours. So here's a smaller cap stock. It's a Digital Ally, signal DGLY. they supply apparently equipment, body cams and stuff to police departments. So however you feel about that, you know, this isn't a political discussion, but certainly that's going to be in demand. And what we see on DGLY is they were in a monstrous downtrend, right? You know, I said wave 3 is really easy to spot, right? It's the biggest, most dramatic price move on the chart, right? Turns out this is wave 1, this is 2, this is 3. We're looking for a wave 4. So when we got good return like this, potential, I will trade a corrective wave 4. And what we've got is really clear evidence, higher high, or a new high, higher high, waiting for a new high to come in, that this uptrend, this uptrend which is corrective would be started. And so new high would be right there at about 714. If I were going to take that trade, which I probably will, I would have my stop down here. And so my stop would be here, my entry would be here, my target would be up at this Fibonacci level. So if we take an entry at 714, we got a target of 1115. That's pretty big, and compared to the risk, it's just easy to see, right? Entry here, risk here, reward here. The reward's bigger. So we're also up above the Ichimoku cloud. You can see it was in a downtrend, right? We've got a crossover of the fast over the baseline. We're up above the cloud here. So this is looking really good for a pretty nice trade here on DGLY. Okay, so there's a trade idea for you that you can walk away from here with right now. So anybody got any particular stock symbols they would like me to take a look at, analyze? I'd be happy to do that at this time. Just type them in there. Type them all caps if you would. It makes it easier. All right, Roxanne would like to look at GE. GE's a great company. Okay, GE's a great company, but right now it's not a great chart because there has been 5 waves already. Just to make it simple, this was 3, this was 4, and this is 5 working itself out. So this uptrend is underway. It's very, very mature, and you know it could go on and on and on from here, but we have no way of measuring it, right? The cloud says, hey, it's in an uptrend. We have a bullish signal here on the cloud, but we've already kind of had our sequence play out, and like I say, it could keep going higher, but we have nothing, no basis to make a projection from. And I really like to have trades where I can project with high probability what's going to happen next, rather than just hoping, right? My stop would probably be way down here, right? Because this is a pretty uninterrupted move. So my stop would be here, right? Where's it going? I have no idea. So it's in an uptrend. It's a great company, but there's just nothing there for me to set up a trade, unfortunately. John's interested in Monsanto, MON. Let's take a look at that, right? So we did think Monsanto was in a bearish move. I had the waves labeled here, 1, 2, 3, 4. We were expecting a wave 5, and it failed. So it does not always work. It does not always work. So what's it doing now? I have no idea. We can't. The deal with any kind of technical analysis is when it falls within parameters you recognize, you can begin to predict what's going to happen next. If it doesn't, it doesn't, and then you can't do anything with it. So this is one that we really can't do anything with at this time. MNGA for Sam. MNGA. Let's take a look at that. Magna Gas Corporation. So is this a oil, natural gas? What is it? What's the play here? Sam, do you know? So it's clearly in a bearish trend, and we do expect a correction sometimes. So before that bearish trend, if we look over here, there was no trend at all. That's just chaos, right? No pattern. Now we've got a pretty clear trend. This is a wave 3. So after this is over, and it hasn't proven that it's over yet, but after this is over, we will be looking at a retracement up into here, which is not that much, not that great, right? So not super excited. By the time it proves that it's heading back up, it'll kind of already be at the correction level. So nothing cooking there for me, Sam, unfortunately. I like you, but I just don't like your chart. All right. Let's take a look at GDX for Bayo. All right, gold. So we've been trading gold this year. Let me just take a quick peek at where gold's at. I'll show you, because all these gold charts depend absolutely. So here's the gold futures contract on a daily chart. We actually called this recovery starting. It was in a massive multi-year downtrend. We called it at 11:13. We said at about 11:13 we had this Dow Theory higher high, pullback, new high. Said, yeah, this recovery's starting, and we traded some amazing stocks. We traded at MUX, Vail, and GLD, the ETF. It pulled back into a wave 4, and now it's in wave 5, and it's up in the target zone. So it's got ways to go, but it's pretty mature trend. So you got to be aware of that the gold's in a pretty mature part of the trend here. So GDX, you know, it followed gold really, really closely. Big move up, nice retracement, this leg up. The question is, where does it go from here? It could have run out of gas. So I'm a little hesitant to get in now. I think it's a little late. If I were in it, right, I would stay with it and just keep trailing my stop up. I would currently have my stop under this pyramid right here. And if it heads up again, we'll probably get another pyramid and you trail up there. But I wouldn't be taking new entries on GDX at this time. NEM, that's Newmont Mining. We've looked at that quite a bit. And that is for Chris. Same, I mean, you can overlay those charts on top of one another, right? GDX and NEM, they're the exact same chart, same comment, right? Been great. This one's got a nice stop right up here into this pyramid. So that's where I'd have my stop if I were in it. And hopefully you've been in it for a long time. Nice trend here. Okay. Let's see how we're doing on time. Oh, we're in good shape here. We're in pretty good shape. So I'll look at a couple more here. EOG for Powell. EOG resources. So what you got here, okay, looks like there's no more data off to the left here. So we have a move 1, 2, 3 down to here. We're exactly in the wave 5 retracement zone on this one right now, right? We're exactly there. So we'll be looking for a bearish move from here. We would need proof that it's heading down, and we don't have it yet. But when it makes its move down, if it comes from these levels that we just marked off, then where it's going is down here, down in this target zone 52.77 to 32.30. It needs to prove, put in a low, lower high, new low, and get below this Ichimoku cloud, because this cloud provides pretty significant support until the trend changes. Okay, so let it get below this cloud, and we'll probably have our pattern, and then you got a pretty good target down here to the short side. Okay, so that's the deal on EOG. That's one I call put that on a watch list, right? Because that could be a good one once it gets going. And so I would say I would put an alert here at about 77.60, and if price gets down to 77.60, come back and see if it still looks like a pretty good trade. All right, let's jump down, take a look. HIG for Zhang. We'll do two more. Do two more. All right, Powell. Hey, you're welcome. So Powell says he looking for that. Good, good. HIG, Hartford Financial Services Group. So when I'm teaching, I teach a master traders course, and I coach students one-on-one. One of the things I teach is when you bring a chart up, within 3 to 5 seconds, you should be able to look at that chart, and you should answer one of 3 questions. Is this in a trend? Is this in a channel, or is this a mess? Right? Channels we can plan trades out of. Trends we can plan trades out of. We can't do anything with mess. Okay. HIG is a mess. Right. So again, I forget who asked for HIG. Oh, it was Zhang. So Zhang, I like you. I just don't like your chart, or the chart for HIG. It's a mess. There's no trend. It's chaos, man. Oh, you're welcome. You're welcome. One last one for Heinz, ACTG. ACTG, Acacia Tech. This is a good one. You can see I've already got it marked up. Right, I've been watching this one. So at this, I probably want to adjust my entry line. It's been just a little bit, right? I would be looking for a long trade. This is a wave 4 correction. Our target would be up here at about 892. And right here, as we get above this cloud, we should have a crossover of the yellow line over the purple, which is fast over slow, right? And we should be good to go on this. Our optimum wave locator will be green and bullish. The PTF's already crawling for more highs. And so we would be looking to put our stop here at about 410. So an entry at 507, stop at 410, and a target of 892. That's a pretty nice reward to risk, isn't it? That looks like it's 4 or 5 to 1. That could be an awesome trade. Trades at a little bit low volume, which may pick up as this heads up. So there's one to put an alert out there at 507 to come look at it if this is the kind of trade you're interested in. Okay, so that's ACTG. Could be really, really good. All right, so let me go ahead and switch back and wrap up my presentation here. And again, you guys can download this PDF with that link. It's still sitting there in the chat area. And let's go back to my presentation here. So, hey, here's some next steps you can think about. So, if you download the PDF, you go, hey, Dean, I get that. That makes sense, right? Give it a shot, man. Give it a try. Analyzing some stocks, scanning for some trades, narrowing it down to a sector. Anytime you try a new trading method that hasn't been proven or it's new to you, man, I should just recommend you do that in sim. Prove it. Prove that the system works and that you can trade it. Both things have to happen, right? Okay, so give it a shot. And the other thing is, if you're interested, I have a stock pick subscription service, right? And so we've got great trades right now. In fact, I'm going short the SP 500. I'm going short the SPY on a 30-minute chart right now. I think that's going to be a 1 to 2 week trade. Right. So on my stock pick service, here's my running average year to year. Right, when the market was still trending hard, we did really, really well. We blew away the indexes, right? So like 2013, the portfolio returned 57% against 30% in the indexes. 14, we tripled them, right? 37%. Last year was tough, right? The market channeled most of the year, but we still caught some really good trades. We made 28%. This year has been tough too, but we're still up. We're positive on this thing because we use really good risk control. We only take the very best trades. So there's no guarantee of future performance. All trades involve risk, but we've been rocking. Yeah. So what you get with a stock pick subscription is 1 to 2 stock picks every week. I'm buying these in my own account with my own money. That's how I got started. I'm taking these picks. I'm trading my money, and people start asking, "Hey, what are you interested in? What are you going to trade, Dean?" I go, "Okay, I'll just start a little business here, right?" And these are just the best of the best. I include option contract details, so people get confused. So I provide the specifications to either buy the shares outright, short the shares outright, or to trade it with an option. The subscribers can do it either way. And then I give a narrative as the trade plays out, where I'm trailing my stop to, where I'm taking profit at, when I'm going to exit, right? I give updates to the subscribers, right? And I do a bunch of teaching. I have some videos on how to use my service, how to use my website, how to manage risk, all that kind of stuff, right? Managing risk is so important. And then if there's changes on the updates on the stocks, whatever, I'll fire off midweek updates so that people are ready, right, and can trade, right? And here's a special offer for you guys here at the webinar today. So the list price for this is $127 a month, and it's a good value because people who are following picks are making money, right? They are profitable, right? So list price $127 a month. I'll give it to you for $97 a month. It's 23% discount, and you can try it for 10 days. Try it for 10 days for just $7. And so I told you I'm going short the SPY right now on a shorter time frame. If you want to see that trade, the exact entry price, the stop price, the target price, the option contract specs on that trade, that could be in your inbox in about 5 minutes. Okay, so you sign up today and you will have that trade as well as a couple others that still have good entries on them, and of course all the future ones that are coming. Let me drop a link here for you guys to take this trial, and I'll give you your money back. So you try it for $7. You know, I really want people to be happy with the service. I want you to stay forever, right? But it's not for everybody. I understand that. So try it for 10 days. You know, spend $7. You know, so that, you know you're serious. I know you're serious, if you give it a shot, you look at it and you go, nah, it's just not my thing, I'll give you your $7 back, right? So $10 for 7 days. If you keep going on day 11, it will bill you 97 for the next 30 days, and then 97 a month forever after that. But it's month to month, not forever. You can quit anytime you want. You can unsubscribe at any point. So, gosh, it's worth taking the trial for 10 days for $7. That's almost like free. So give it a shot, and that includes a consultation. So if you sign up even during the trial, you'll get a link. You can throw some time on my calendar, and we can get on the phone, get on Skype or whatever, share screens, look at charts, and I'll be happy to answer any questions you have, teach you during that time. So the $7 trial includes one-on-one time if you would like that. And again, there's some training videos, good documentation on how to use the service, how to use my website, the information there, all that good stuff. Okay, I'm going to go ahead. I posted the link for that. I'm right up against, I think, my time. I was given 45 minutes, so I want to honor that. Any final questions that anybody would have here that I could answer for you before we wrap it up? I'd be happy to do that. It's great being here. Appreciate the questions, the charts you asked me to look at. It's been really, really good. So I'm just checking here in the questions box, see if any other final questions. And if not, I think it's back to you, Renee. Thanks, everybody.